Hello everyone and welcome back to my new video. Tesla Inc. Shares wiped out about $109 billion off its valuation in the course of a single day after the electric vehicle maker's fourth quarter earnings and outlook failed to impress investors. Shares of the Austin, Texas-based electric vehicle maker plunged nearly 12% on Thursday after an earnings call the previous day that was long on a humanoid robot called Optimus and short on new vehicles. The stock closed at $829 in New York, the lowest since Oct. 14. The decline was the second biggest on the S&P 500 index on Thursday. The last time Tesla erased more than $100 billion in market value in a single day was Nov. 9. Shares of Tesla Inc. Powered up Monday, after the electric vehicle market leader was upgraded by Credit Suisse analyst Dan Levy as he turned bullish, saying the recent sell-off has created an attractive level for investors to buy. While fundamentals remain highly favorable, Levy raised his rating to outperform. After being at neutral since April 2020, he kept his stock price target at $1,025, which implies about 15% upside from current prices. The stock Tsla, minus 5.09%, shot up 10.3% in afternoon trading. After tumbling 19.4% over the past 2 weeks, it was still trading about 24% below the Nov. 5 record close of $1,222.09. Levy said the weakness in the stock market over the past month, amid fears of rising inflation and interest rates and macro uncertainty, has been disproportionately punishing growth stocks. Tesla was not immune, and has fallen enough that an attractive entry point has emerged to buy into a company that Levy believes is at the heart of the multi-decade secular transition to EVs. Tesla is a one of one. We are hard-pressed to find a stock that checks all the boxes as Tesla does. Attractive growth story, disruption, decarbonization, etc., Levy wrote in a note to clients. Accordingly, with robust fundamentals ahead and with the stock having been caught in the market decline, we believe the stock should recover. Tesla had reported last week fourth quarter earnings that were well above analyst expectations. But the stock fell after the company revealed that factories had been running below capacity for months as a result of supply chain constraints. The supply chain issues didn't deter Levy, however, who said he expects further volume growth and sustained margin strength in the coming years. Relative to peers, with less question around demand and much more question around supply of EVs, Tesla should be a key beneficiary. It has a product lead versus others, and has taken the most holistic approach in EV supply, Levy wrote. Not only does Tesla not have to tackle the challenges that legacy must address, but Tesla also has leads in supply, vertical integration, software, product simplicity, and capital availability. Tesla's stock has tumbled 16.2% over the past 3 months, but has rallied 17.6% over the past 12 months. In comparison, the S&P 500 index SPX, minus 1.79%, has slipped 2.4% the past 3 months and run up 21.0% the past year. Elon Musk offloaded approximately $1 billion worth of Tesla stock on Tuesday, according to SEC filings, including this most recent transaction. Musk has now sold over $11 billion of Tesla shares since November 8. Musk says has been selling the stock to pay what he claims will be the largest individual tax bill in U.S. history. The total could come out to be over $11 billion. Tesla's stock value has risen more than 50% in 2021. And Musk continues to exercise stock options granted through his executive compensation plan. He most recently exercised options granted in 2012 that gave him the right to purchase shares at $6.24. Tesla shares are currently trading at nearly $1,080. The upcoming tax bill, if it is as high as anticipated, stands in stark contrast to previous years. Based on leaked IRS documents, ProPublica estimated that Musk paid a true tax rate of around 3.27% between 2014 and 2018. His net worth currently stands at $279 billion, making him the world's wealthiest person, according to the Bloomberg Billionaires Index, with record taxes due. Musk has seized the opportunity to challenge the narrative that he doesn't pay his fair share. Earlier this month, Senator Elizabeth Warren wrote on Twitter, Let's change the rigged tax code so the person of the year will actually pay taxes and stop freeloading off everyone else. In reference to Time magazine naming Musk its person of the year for 2021, Musk responded, "If you opened your eyes for 2 seconds, you would realize I will pay more taxes than any American in history this year." Top U.S. tech executives have sold at least $70 billion in shares in 2021, a record rate that represents an increase of over 30% from 2020. Musk leads the pack, but Amazon founder Jeff Bezos isn't far behind with his $10 billion in stock sale. And Satya Nadella sold around half his Microsoft shares for around $285 million. For Nadella and Bezos, the sales will help them avoid tax hikes imposed by the state of Washington. Tesla stock was up more than 10% year-to-date when it released better than expected Q4 and full-year production and delivery numbers in early January. Now, the electric car stock is down nearly 20% YTD after reporting Q4 and full-year earnings after market close on Wednesday. Tesla isn't the debt-dependent company it used to be. It is now consistently profitable and free cash flow positive, meaning that its business generates more cash than it needs to run its operations. This dynamic is a stark contrast to the production hell days when Tesla was diluting its stock or borrowing money to make ends meet. In fact, Tesla ended 2021 with debt of just $1.4 billion after paying down $1.5 billion in debt. Tesla has one of the highest operating margins in the auto industry, expects production volume to increase by 50% in 2022 compared to 2021, and is on track to grow its global manufacturing footprint once it opens factories in Germany and Texas. It's worth mentioning that Tesla believes the 50% production growth goal is possible using capacity solely from its California and China factories. Tesla cited ongoing supply chain constraints as an issue that could impact its performance in 2022, along with broader market headwinds. It wouldn't be surprising to see Tesla stock continue to be volatile and fall further from here. But the long-term thesis for Tesla is brighter than ever. Tesla is a polished company with a leading position in the electric vehicle industry. There are plenty of other attractive buys in the EV space, but Tesla remains a worthy addition to a diversified basket of EV stocks. There's still a lot of wishful thinking in Tesla's valuation. John Roseveare. Bulls were excited about Tesla's fourth quarter results. The company beat Wall Street's expectations for revenue and earnings per share. Specifically, its operating margins look good, as you'd expect from a company that gets luxury car pricing, doesn't have to pay franchise dealers, and operates in market segments where the competition is still thin. That's all good. After years of losses, Tesla now has the scale and pricing power to deliver profits. Nicely done, Mr. Musk. But none of that is what drove Tesla to a $1 trillion valuation last year. And it's not what is supporting the company's current valuation, around $835 billion as I write this on Friday. What drove Tesla to those still insane valuations is the story. As fans tell it, Tesla is a no-brainer to be the world's largest automaker in a few years, powered by massive demand for its cars thanks to technology that nobody can match. Tesla will max out all the factories it can build. It will deliver full self-driving years ahead of rivals, and, countering 120 years of automotive history, its vehicles will actually appreciate in value thanks to that amazing tech. Tesla the company versus Tesla the stock. Bulls and bears agree that Tesla has come a long way in recent years. It is now a well-run, profitable automaker that is the undisputed leader in the EV space. Where opinions differ, however, is how that lead will fare in an environment of increased competition, and what price is worth paying for Tesla stock. Holding Tesla stock is fine if you like the long-term thesis and are aware of the risks of a very expensive valuation. However, other investors may be better off watching Tesla from the sidelines to see how it stacks up against the onslaught of EV capital investments from legacy automakers and new players. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, then don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.